I think from a investor perspective, any investor whose bread and butter is not equity markets does
Hmm.
require an advisor. So
True.
just by looking at your friend's portfolio or hearing that your friends are invested into an Apple or a Meta stock, you should not get into investing into any such kind of opportunities. And there are contrary and there are pros approach to it. I just give a US perspective right now. So US market over last 2 years has grown from a 55 trillion to 72 trillion market. That's the size of economy that US market brings in.
Hmm.
The whole India comprising is close to 4.5 to 5 trillion. One
Very true.
Nvidia, one Nvidia of US is close to India market. One Nvidia is 5 trillion market at this point of time.
Welcome back to this exciting episode of Fintech Ki Baat. I'll say today we have with us Mr. Satinder Aggarwal, as you just saw in our previous episode, founder story, wherein he shared his really interesting journey of building a unique wealth tech platform. He has almost 2.5 decades of experience working across India and the globe. I think currently he's based out of Dubai and has built a company called EQBAC, Equity Basket, if I'm not wrong, Equity Basket Capital. It
Right.
is a very uniquely polished company that is kind of building the middle layer or the middleware for Indian investors to invest in assets across the globe. Once again, Mr. Sandita, thank you so much for joining us today and giving us your time.
Thanks a lot, Shreyas. This is welcoming. This is great. Thanks for kind of covering us, and hopefully would be able to add value to the audience.
Definitely, and global investments right now is an emerging and a very trending space in India, specifically among young investors as well as HNIs. And when I heard about EQBAC for the first time, I think I was super excited to learn about what's happening because I have been dabbling myself in this space across a few platforms that offer this opportunity, but I was always curious to understand how it is happening, what's happening behind the scenes, and also what really kind of also excited me, and probably you can touch upon, is how do you see the fractionalization of these stocks that happen in on certain platforms, right? So that is also super interesting. Before we dive into it, we'll quickly take a pause here. If you guys haven't seen the previous episode, just click on the link that's somewhere on your screen right now, and you should probably go check out his journey. Hear what he has to say about what's happening in the global ecosystem and the Dubai ecosystem, and come back. We'll wait for you. All right, now that you're back, Mr. Satinder, let's quickly deep dive into what's happening. What essentially EQBAC is all about. Just quick for someone who has not heard about EQBAC. What would you kind of say?
Perfect. Just on the small piece, while Dubai, India becomes very important for us. So India becomes our main holding company as we move forward.
Oh.
We have a Dubai, Mauritius, Singapore leg as well. All of that
Mm-hmm.
becomes subsidiary of the India. So India becomes central activity from our perspective going forward. So
Awesome.
I think yeah. So
Mm-hmm.
that's the context there. From a diversification perspective, Indian investors, let's say if we just talk from an India investors perspective, are
Mm-hmm.
seeing valuations happening multifold. Valuations unlocking importance of investing into a non-fixed income market. I think that's happening. More importantly, moving beyond the bank fixed deposit. So people are coming off ages into getting the money invested. SIP is helping big time there, but today everyone, whether they understand the equities basic or not, they do want to invest into mutual funds. So right from 100 rupees, 2,000 rupees to a lakh
Right.
rupees, someone is doing a crore SIP as well. That money is
Mm-hmm.
kind of getting invested. Now, these investors, I would say, I would include here the affluent segment as well, affluent, semi-ultra HNI, HNI. They're very curious on the dollar side. These are the investors who are traveling across the globe. They're hearing global news.
True.
For some reason, we all track US treasury market, US interest rates also. So, people start talking about interest rates are now expected to go downwards. Indian equity markets will move upwards. Some kind of relation people want to put it in the layman terms. So people are getting attracted to what's happening overseas. But the moment they start thinking to invest across the border, cross border,
Mm-hmm.
that's where the complexities start arising. Jurisdiction, taxation, how to do it, where to do it, who's the best advisor, whether there will be a taxation benefit to it, or we will get into a tax loop. So there are complexities which suddenly arise once you start thinking to invest into a cross-border instruments. So this is the stage that it is a cusp rather where we are, wherein there is an investor interest getting interested to invest across the globe, but they
True.
require a seamless journey. Seamless journey. How to invest into Apple, how to manage taxes here, how to invest
Hmm.
into a Franklin Templeton mutual fund. Does it affect my taxes here? How to invest into a complex derivative product which comes into their kitty like a structured note. Does it uh, does it bother the Indian regulators investing across the border? Or it could be a treasury bond or an Adani Vedanta bond. So people would want to invest, but the complexities disallow them currently to invest. So this is where we are trying to
Indeed.
step. Yeah.
Hmm. No, perfect. I think that as the Indian investor market kind of expands and the investors want more diversification outside the Indian equity mutual fund and the emerging alternate investment market from terms of bond, I think we have seen a lot of popular apps and retail platforms bring out options of investing in US stocks, and specifically I saw it actually happen big time. Kind of pick up and do correct me if I'm wrong. Recently, when the Nvidia rally happened, when the GameStop rally happened, and a lot of investors recently also I've seen in a few circles that even right before iPhone launches, people are like, hey, you should invest in Apple through this platform and all of that. So those conversations are happening. You see the buzz happening, but people are still unclear about what essentially how the impact will be on tax, as you said, and how does it overall मतलब जितना एनालिसिस उन्होंने इंडियन मार्केट्स का किया हुआ है उतना आई डोंट थिंक दे हैव बीन एबल टू डू ऑफ द यूएस मार्केट्स एंड दैट इज आल्सो वेयर another shortfall is, which is in terms of advisory. So from an EQBAC perspective, probably kind of take us through uh, how do you see this space one evolving in India from one is retail investor mindset, and then probably we could look at how you are seeing that how you guys are kind of helping out advisors and the other advisory platforms that are there to kind of enable investors.
I think from a investor perspective, any investor whose bread and butter is not equity markets does
Hmm.
require an advisor. So just
True.
by looking at your friend's portfolio, or hearing that your friends are invested into an Apple or a Meta stock, you should not get into investing into any such kind of opportunities. And there are contrary and there are pros approach to it. I just give a US perspective right now. So US market over last 2 years has grown from a 55 trillion to 72 trillion market. That's the size of economy that US market brings in.
Hmm.
The whole India comprising is close to 4.5 to 5 trillion. One
Right.
Nvidia, one Nvidia of US is close to India market. One Nvidia is 5 trillion market at this point of time. But those 7 to 8 stocks, which are those FANG stocks, or as I say, the Apple, Meta, Facebook, Amazon, couple of them more, are the most favorite stocks. So this comprises close to around 25 to 30% concentration of the entire US market is within this particular stocks. And these are the
Right.
stocks which are seeing most of the rally happening right now. So from an investor perspective, is it a good time to kind of participate in overly priced stocks, or look at the other opportunities which also present in those particular markets? I think all of
True.
these questions are answered better by an advisor. So there is an importance. So from our perspective, we bring an ecosystem of not only the instruments, not only the product providers, not only opening up of client actual bank and a custody account, which is part of our
Hmm.
entire onboarding journey, but more importantly, we work with the advisors. So we are not on the B2C side. So we
Hmm.
don't we don't step into an advisory issues. We let the job managed by the experts who work with the clients, who meets with this client on a very regular basis, because they have the client pulse. What is their client risk appetite? When do they actually need money? So we leave that job to advisor. We believe in AI, that AI will change a lot of things down the line, but we are very sure that the advisory layer cannot be eliminated. So an AI
Of
can
course.
present you the top 10 stocks. This is the
Hmm.
performance of those top 10 or top 10 sectors. But the advisor interaction with you when the markets are good or when the markets are bad, how do you align that with particular risk goals? Even if a particular stock is overly priced, the AI might not tell you that you should invest now. The AI might just look at the algo and say it's an overly priced stock, so don't invest. But
Right.
the advisor can tell you, looking at the sector there, looking at some piece of information that the sector will talk about, and he might still tell you to stay invested in that particular stock or do some bit of a price. So we leave the final decision between an advisor and the client. Our job is to give this set of clients the entire infrastructure of the ecosystem. When I say infrastructure, everyone, current India perspective, is
Hmm.
looking to invest abroad.
Right.
How do I move the money abroad? Where does the money sit in? Uh, can the money sit in cash and stay not invested? Or to some extent it can. So
Hmm.
what we do on the stage one itself, we open up clients offshore segregated bank accounts and
Hmm.
custody accounts, which opens currently at a click away. So you're sitting in Bombay. Suddenly on day one, you will have a bank account on your name opened up in offshore territory. You'll have a custody account in your name opened up in offshore territory, and those global custodian banks will now give you instrument feeds, which is coming on your app, which is coming on the tech that we would have created for you. And you get to see those instruments and you're able to transact those instruments, settle those instruments in this particular custody. So this is the
Hmm.
backend infrastructure that we're able to provide. We can cover the KYC part of it, the entire process part of it. But from an investor perspective, that complex maze which currently is there, we're trying to solve that maze. From an
Makes sense.
advisor perspective, the complexity that he has is to seek terms of business from all of these product providers, exchange
Hmm.
brokers, custodian banks, fund houses. So he has to go and seek terms of business across the ecosystem. And then
Right.
his bandwidth gets reduced accordingly. We give him the entire ecosystem on the day one.
He has a
Yep.
single entire piece
Sing-
as well.
Yeah, absolutely. Absolutely.
Perfect. I think this is really interesting, and I think let's start to kind of peel the layers off a bit, right? Let's kind of break it down and understand it from a first from a retail investor perspective on how he would interface with an advisor that's kind of offering him this service that's kind of powered by you. What would that journey look like from let's say first step of KYC to kind of ultimately investing and then probably even selling. But and the secondly, then we'll kind of get into a bit more details for each of the chapters. So over to you.
Perfect. So when a retail investor reaches out to us directly, we would give him preferred advisors. We would give him preferred advisors to get onboarded either through this preferred advisors, or we would tell him to introduce to us his own current wealth advisor. If that wealth advisor is good enough to be onboarded, we will onboard that particular advisor on the platform. So, again the importance of the entire journey, wherein the advisor has to be involved. So, assuming the
Hmm.
investor and the advisor here are together, so we give advisor a distributor login, a broker login for
Hmm.
him now to onboard these clients onto the digital interface. The journey is simple. The advisor will collect a pre-filled information, client's KYC, bank details, nomination details, how many holders are there, more importantly, source of wealth and a current bank statement to kind of to cover up the AML requirements. The money has to come
Hmm.
from a client's source of funds to get invested.
Right.
From a KYC documents perspective, we would need ideally a passport. Even an Aadhaar card from an India perspective is good enough. And a current dated address proof, which should
Hmm.
not be older than 3 months. So an
Understood.
ID proof, address proof, bank statements, last 3 month bank statement is good enough for us to kind of onboard a particular client. The
Hmm.
advisor picks up this digital documents, uploads the document onto the interface that we have given. He uploads a client
Right.
KYC onto that interface. That interface we have plugged in with global AML ecosystem, which throws
Hmm.
us a data of the client KYC, if any sanction or any FATCA disapproval that the client has across the globe. So that's the KYC plugin that we have with the international AML players. Data
Makes
is
sense.
3 minutes. Within 3 minutes, the data gets populated for us to let us know whether this client is good enough to be onboarded. or we might require an additional requirement for the client. So we'll then populate to an advisor. Advisor will go
Mhm.
back to the client to seek more information. The journey is simple. The onboarding form gets filled up. The advisor now starts filling up the client details. So our journey is advisor driven. We don't want a client to do this, do the entire legwork. Even
Mhm.
in the physical form, the advisor, we see advisor ends up filling up the form and takes the client is there. So here we kind of kept the similar kind of a journey when the advisor will fill up the required information digitally for the
Right.
client for the client then to see whether the requisite information is correct or not. If the information is correct, the client gets a digital link to sign off. So he
Mhm.
signs off the entire application which he has done. He then
Right.
signs up on the risk profiling which happens through the particular platform so that we are able to meet the client risk appetite. So onboarding form, risk appetite gets digitally signed. There is a link which opens up for a client for his facial recognition because we want to see that we are dealing with a live client. It should not happen since it's a digital KYC. The client is no longer there.
Right.
So a facial link gets populated for the
The
client to
liveliness
verify
check, as they call it.
liveliness checks happens there. It
Mhm.
happens the way it typically happens. Uh, all of that is good to go within matter of couple of minutes. The form reaches out to my backend operation. My backend operations will liaise with compliance, do their backend check. If it is during day hours, within 3 hours, the client's wealth management account gets active. So there is a wealth
Mhm.
management account journey which gets active within 3 hours. Within 5 working days, we open up client's individual bank and a custody. Custody is another name used for demat. So we open up
Okay.
client's bank and international demat account with offshore custodians. So that takes
Mhm.
around 4 to 5 working days. So wealth account gets created, 4 to 5 working days. Client's bank and a custody account gets created.
Understood. So essentially, where would this custody account or the international demat account essentially lie? Is it geography specific, depending on which country's instrument you're investing in, or would it be something that works for?
So from our perspective, we have three larger custodians in our ecosystem: Stancy Singapore, Citibank Singapore, and State Bank of Mauritius in Mauritius. We open up one client bank account, which happens with SBM, State Bank of Mauritius in Mauritius. And there are three custody accounts which get open under the segregated name,
Mhm.
which basically means that custody account belongs to the client only. So that gets open with Stancy Singapore, City Singapore, SBM Mauritius. So it's
Okay.
basically client is not interacting with these multiple custodians. It is the infrastructure at the back end which is working for the client.
Understood.
So, so Stancy, we are able to settle clients' global equities. With Citi Singapore, we are able to settle clients' treasury bonds or any fraction bonds that they want to invest. With SBM Mauritius, we are able to settle their dollar mutual funds or gift city fund that the clients would have invested into those particular funds.
Mhm.
Respective custodians for a specific job because all of them they bring their own nuances, they bring their own expertise. While Stancy can do multiple things, but we are restricted them for only equities and ETFs.
Understood.
Between us and these custodians, there are brokers also involved,
I see.
which brings us these custodians. So
Mhm.
there is multiple aggregation which is there at the back end. But from a client and advisor perspective, they have to just upload the KYC onto the requisite terminal that we have given. Then through the API networks, we talk to these multiple custodians.
Understood.
But end of the day, the client gets to see his own bank account, which is open under the institutional category of equity basket. He gets to see his own demat account. So he's transacting through his own accounts. So
Mhm.
his idea that I need to move my money overseas, I need to park my money overseas as well, and I need to invest through those particular investment avenues also, was up till now available to a client to open a private banking account, which was $3 to $5 million kind of a requirement.
Right.
So we are segmenting, fractionalizing that to a retail set of clients. Our average ticket size is around 25 or $1,000. Average AUM that we want on a platform is around 25 or $1,000. So we
Mhm.
are able to kind of get the entire infrastructure to a retail investor for as low as ticket size of 25,000.
Understood. So this, I think, that was really an in detail explanation, and thank you so much for that. What really kind of amazes me here is the kind of orchestration layers that you would have to build on top of all of this multiple API infrastructure that are coming from, the three custodians as well as the bank account as well as the brokers to kind of give a seamless experience to customers. I think
Yep.
that must have taken a lot of heavy lifting from a tech perspective as well
Yes.
as an operations perspective. Having said that, what really matters is how the final outcome is coming out and what it really means. And in this case, it kind of means democratizing, foreign investments for kind of retail investors in India and across the globe. So, what kind of investment avenues does this open up for the retail investors that are kind of, looking to get into this?
But in terms of the underlying instruments, whatever we are getting in India is typically that we are getting globally as well. The
Hmm.
currencies and the underlying geography changes. So, in terms of instruments, yes, you're getting now global equities, you're getting global ETFs, you're getting fraction bonds, you're getting fraction mutual funds as well. You're
Hmm.
also getting global IPOs, IPOs which are very active, global pre-IPOs rather, not even a global IPO, but
Oh,
global
wow.
pre-IPOs we are able to plug in for as low
Hmm.
ticket size like a 500 odd dollars. The issue size there could be billions there. Entry level ticket size could be around 100 or $1,000, but through the plugins, it could come to you for as low as 500 odd dollars. So
Understood.
that market is also very active. Indians now are very active on the pre-IPOs, unlisted opportunities available in India. Similarly, when they get to see that overseas opportunities, pre-IPO side is also available, which was so overseas equity market was the mother of all equity markets. Right? India markets obviously involved
Hmm.
later on. So whatever is happening in India has already happened there. But people have not privy to what happened there and whether they can participate. So we're getting the listed zone for them and also the unlisted side into their kitty. So this is all the kind of revenue. So whatever you are experiencing in India on the rupee side of it, with the
Hmm.
rupee companies, with the top 500, 200 cap companies, we are able to get on the global side.
That's kind of like opening up an additional Pandora's box in a good way for Indian investors to have a higher dynamic range of investment options available. When we kind of talk about fractionalizing investments, right? We really haven't seen that phenomena in the Indian ecosystem yet, right? This is what something I've observed more from a global assets perspective. So could you just kind of throw some light onto what essentially happens there? How does fractionalization happen for global stocks, global ETFs, mutual funds, and also if you can probably help me understand why is it not happening for Indian companies yet?
So different instruments have different fractionalization. We are able to get it all through the platform. So let's say global equities, as you know, it is very
Hmm.
evident that you can, if the Tesla is trading at 200 or 200 odd dollars, you can own Tesla by investing even $2. So
Right.
that's the kind of fractionalization which offers. Those particular features now currently is available directly through exchanges. So the
Hmm.
exchanges themselves allow for an investor to invest into fractions. The idea
Okay.
of fraction there emerged because the company size there, the market cap of these companies started growing bigger and bigger. Even if the floated shares started increasing, but still the
Hmm.
market caps and the average ticket size started increasing bigger and bigger and larger
True.
price perspective. So to increase the market depth, that's where the authorities there figured out that let's fractionalize the investment. So that someone who wants to invest into a high growth company just
Right.
because they don't have the requisite amount should not be deprived of investing there. So
Hmm.
it is more of a growth phenomena. It is not that India cannot do it. It is, I think,
Hmm.
this just from a market size perspective. 5 trillion comparing peers vis-a-vis global is too smaller size. I believe it's
Fair.
on the cards. So that should happen. Yeah.
Makes sense. Makes sense. So I think, as you rightly said, no, this kind of seems like it's a maturization of a market phenomena wherein
Yeah.
companies have reached a market cap wherein their individual shares have become really expensive, and to drive affordability and democratization of that investments, that is essentially why fractionalization happens. I mean, I know this might sound like more of a speculative question, but how far out into the future do you see this happening with Indian companies? I mean, there are already companies out there with shares trading at an equivalent of around $100 right now, probably $150 right now, probably more. In terms of Indian companies.
Indian companies, the like of MRF and all, those could be in lakhs per
Hmm.
share price there. There are not that many companies, and different companies have adopted different approach. So
Right.
the large and heavyweights, they keep on diluting their shares. They keep on kind of resetting the issue size number, so they're able to kind of
Hmm.
still have that much float available in a particular market. I
Right.
think it is just a matter of maybe next 3 to 5 years, if not more than that,
Hmm.
that we would be able to see that phenomenon happening very soon. So currently, if you want to buy a stock, it does very rarely you would see that you have to shell 10,000 odd rupees to buy a particular stock. But
True.
once we see that there is that many more companies available, I think it is just a matter of time. We will follow that particular trajectory for sure. So equity market is not our baby. Equity market is more that we are seeing what's happening globally. So this is
Hmm.
if this is working globally, it is helping to increase the market size. I think we will see that happening in India very soon.
Fair enough. Makes sense. Uh, Having said that, kind of taking a bit of a segue here, you know, this entire space is a heavily regulated space, and specifically when you're talking about global markets, you're most likely dealing with multiple regulatory entities and regulators as well. What's been one of the hardest puzzles from a regulatory perspective that you have to deal with, and how did you kind of overcome that?
You would need to be there in some jurisdiction, some regulated, accepted jurisdiction, to kind
Hmm.
of get the requisite license. So
Right.
Gift City for us is on the cards. Currently, we are operating. We have an India leg, we have a Dubai leg, which is more of a service marketing leg, and then we have a Mauritius arm to it, which is where we get the license from a financial service commission. So
Hmm.
we follow the trail of Indian fund houses, the likes of Motilal,
Right.
Sundaram, SBI, Nippon. All of these guys, when they started off their FPI wings, they
Hmm.
first started off from Mauritius. Then they ventured out to Singapore, Luxembourg, and now they are all of them are setting up the wings in Gift City. So Gift City is nothing but an offshore jurisdiction.
Hmm.
All of these booking centers are nothing but just an offshore jurisdiction. So
Makes
you
sense.
need to be present in any of this offshore jurisdiction with the requisite license. So and I can get terms of business from any of these global players by picking up a Dubai license or an Abu Dhabi offshore license or a Gift City license or a Mauritius, Singapore license. So you need to be present in one particular territory to get the terms of business and get the business moving. But in
Hmm.
terms of scalability, you need to pick up a local license. So let's say if I talk to an Indian audience in Indian IFA that I'm bringing you global products across the globe, but the booking center is Mauritius, vis-a-vis I tell them the booking center is Gift City, I will get that much more acceptance when I propose a Gift City proposition to these guys
Of
rather than a
course.
Mauritius or a Singapore.
Hmm.
So to
Makes sense.
cater to a larger audience, a local jurisdiction regulation is that much more important so that you're able to resonate well. But
Hmm.
to float around, one license currently is good enough.
Fair enough. Makes sense. I think it's definitely sounds like a very tricky regulatory situation in terms of the complexity, not in terms of this thing. But when it comes to let's say buying stocks from let's say a US market or a S&P 500 or any other stock exchanges, uh, how do those regulations come in to play when an Indian investor is kind of an Indian investor is kind of buying from let's say a New York stock exchange and based while he's based out of India? What kind of regulations and tax impacts will come into play?
So Indian regulation A to begin with does not disallow an Indian investor to invest across the border.
Right.
Uh, $250,000 in a particular calendar year, every individual can invest across the border. So there is a first tick mark that from where the money leaves to an overseas territory, that regulation allows you to invest across the board.
Hmm.
Uh, it could be into any of these instruments, equity ETF, funds, thereabouts. So right now, obviously, there is a layer that we're talking about. The money gets routed through Equity Basket platform and reaches to this global custodians. Whenever the money reaches to the exchange players directly, the exchange players, the exchange brokers are also not deprived of accepting investor money across the globe. So those exchanges are well equipped through
Hmm.
their brokers to accept money from jurisdictions across the globe.
Right.
Even let's say, even if from an India perspective, the India perspective, you need to kind of still have those PIS formalities done, or the FPI formalities done, kind of invest into an Indian stocks market.
Hmm.
Globally, it is not that stringent currently. From a global exchange perspective, you can accept money from an investor across the globe through those regulated brokers. So those regulated brokers get terms of business from the exchanges. They comply with the KYC of these investors, which comes through them, or when it comes to players like us. So those KYC intermediary players ensure that the client's KYC AML are taken care of completely. It is a clean money which is getting accepted by us and which is getting transmitted back to them. So that onus
Nice.
lies on us. But it's an accepted way to accept global money through these
Hmm.
exchanges or with these fund houses currently as we speak.
Understood. Thank you so much for sharing that. Kind of let's move into a slightly a different thought experiment that I was thinking about. Uh, how do you see the entire ecosystem evolve when we assume that, let's say, 30% of retail Indian investors, uh, given the fact that the platform that you're building is actually now democratizing this kind of assets for a larger Indian investor market. How do you see the ecosystem evolving when, let's say, 30% of Indian investors are start actively investing a decent chunk of their portfolio, and by decent chunk I mean, let's say, around 10% or 15% of their portfolio into these kind of assets? Uh, how do you see the market dynamics changing? How do you see the market depth in India being impacted versus Indian money essentially being invested abroad? How do you see the returns of kind of improving, increasing for Indian investors and all of that?
I think from an investor perspective, the idea is diversification.
True.
Okay, as an investor, you would want to invest into performing stocks. So you would want to make your money work. So that money cannot be aligned to your passion. That money has to be invested into any companies that can work for you. So if an investor was a businessman, he could have possibly make the money work for him 5 to 8 10x, whatever perspective. But he's
Right.
not a businessman. He wants to put his money into somewhere in some other companies which can give him that many returns. So
Hmm.
for investor, right at the onset, should not be passionate that this is where only the money should be there. So
Of course.
and now with the markets evolving, now with literally the global acceptance of each and every country getting increased day by day, and the investors also kind of reaching out to those countries either to travel purpose or to business purpose, they're able to understand what's happening across the globe. Those right set of information is still not privy to them. So once they start getting those information, they will be more comfortable to start investing as well. So it will not affect the India market from that
Hmm.
particular perspective that we suddenly see the India money going abroad and the abroad money does not coming here. The
Right.
abroad money, the FI money which is coming into India, it is a diversification for them as well.
Obviously.
Okay,
Obviously.
we run with some data center, let's say in Dubai, that
Hmm.
FI money, which FI allocation currently, which was only 1% to India, is increasing. Has increased by 10%. So basically, the 1% would have become 1.2 or 1.5 on a higher side. So that's a very little money which is moving into India from an FI money. So
Right.
it works. It is working both the sides. So idea is that the impact on India will not happen because someone over there is also taking India as part of their diversification goal.
Makes sense.
The India investor needs to be more informative where the money is giving him a better returns. We are all consumer of all of the stocks, uh, Apple stock, so someone is advising. the Apple new iPhone is getting launched. Let's invest into Apple stock. So
Hmm.
all these are all consumer stocks. Apple, Meta, Nvidia, Google, which is Alphabet now. We are all consuming this day in day out. How do we invest in India? We pick up some companies which are highly consumer driven companies. We feel these are consumer driven companies. This company's profit will grow. This company's demand will grow, and we should invest with those companies. All of the stocks we are consuming day in day out, but we're not
Right.
investing there. So first rule is that at least those top 10, if not top 30, should be invested right away. So I think so. It basically starts from there.
No, fair enough. I think, and thanks for bringing that out. What is something that's really important that you highlighted is that India market is not impacted in a way that the fund is going away, wherein because it also becomes a part of the global diversification platform. But overall, this essentially this entire investment avenue kind of creates a global investment interoperability scenario wherein a larger ecosystem is created of investors that kind of invests across their multiple cross domains of multiple countries to kind of create the larger investor ecosystem and create a larger diverse pool of investment instruments available for investors. Uh, Having said that, moving on to the kind of final segment for this episode, which is essentially wherein I know I would want to understand how you look at this segment evolving in specifically in India for over let's say next 2 to 3 years down the line. From a retail investor perspective, from a perspective change in the retail investors, and secondly, how more easily do you see investors interfacing with these instruments in terms of currently, for example, it being exclusive to advisors, to it opening up to more retail apps. Like one of the apps that is out there, for example, IND Money is one of the apps that kind of offers, and there are a few more. But the volumes as of now on those apps for these investments, it is also slightly, not on the higher side. So how do you see that scaling up? What uh, maybe from an awareness side or maybe from initial fear of entering whatever there is there in some of the retail investors, how do you see that being unlocked and move over the next couple of years?
I think rightly said. I think very importantly, the dollar awareness is increasing. The
True.
Indian government itself is making sure through the gift city route that people should get more receptive toward dollar offering, whether it can be a dollar inflow or a dollar out.
Hmm.
So I think ever since Gift City has involved, the awareness of a dollar-based offering with the advisors, with the fund houses ecosystem, and definitely with the end consumer, the client's perspective, that awareness is increasing big time. Even from an EQBAC perspective, while we're talking about we should take exposure to overseas market, we are also facilitating the investments to be routed into India through these offshore routes. So
Hmm.
fund houses, the likes of Abacus, Sundaram, SBI, they are based in Singapore, Mauritius, thereabouts. We have those fund houses also on our platform. These fund houses pick up global money and they invest into India.
Hmm. Hmm.
Okay, they pick up global NRI and global national money. They pick up those money and they invest into India. We have those fund houses aggregated on our platform as well. So let's
Hmm.
say in India, when you want to invest into an HDFC mutual fund, you don't go directly. You go to an aggregator app. Through
Right.
that aggregator app, you invest into multiple funds. So
True.
part of our offering is also aggregation of these mutual funds, which are
Hmm.
picking up global money and investing into India. So you come onto our app, click any of these funds. I'm talking from an NRI perspective here.
Hmm.
Click any of these apps, click any of these funds, and seamlessly now your dollar can be invested into India. So you don't have to kind of route the complexities around the NRE, NRO, dollar conversion. Tomorrow when you want to repatriate, again convert your rupee back to dollar. So we are able to kind of solve that particular maze as well for an NRI convenience to invest into India. So this is the gift city now being there is making this effort that much more realizable. Those offshore
Understood.
jurisdiction existed for good 20-25 years. The
Hmm.
kind of inflows those FPI money is currently having in India is unimaginable. So 23, 24 odd data, the FPI money through this route is currently close to 100 billion odd dollars. is seeing 20-25% jump growth on a year-to-year basis. So from a dollar awareness perspective, the gift city piece is happening big time from an Indian consumer
True.
perspective. Uh, uh, I think so. So from an evaluation perspective, once the awareness is there, once the ease of convenience, the acceptability around it, the advisor leg is very important. While we talk about the direct B2C apps being there, the B2C apps is just like your erstwhile investing into a stock market on your own, or investing into a stock market through an advisor or through a fund manager.
Right.
So I think this is where we are trying to kind of bringing to the picture. Those B2C apps are more of a dedicated stocks portfolio. So we
Hmm.
are not restricting an investor to only to a stock portfolio. We are including their mutual funds, we're including their treasury bonds, we're including their global treasury notes, pre-IPO stocks as well. So this is what is happening through a player like us, that we're not restricting ourselves to only one particular segment, and we are accepting and recognizing the advisor fraternity here big time. The wealth advisor, the financial advisor, stroke distributor fraternity is very relevant and important for us to guide that client into a particular risk appetite instruments. So this becomes a very important layer from our perspective. B2C have their own opportunities, but they have their own challenges as well.
True.
We, from our perspective, we want to give the complete infrastructure to an advisor. So today, an advisor who's running a book, tomorrow he
Hmm.
wants to set up his own shop. All that he has to think of is EQBAC. That I can immediately resign today and tomorrow set up my own shop because there is a ready infrastructure which he would get from EQBAC, because he already has his clients. He has to just kind of set up his own shop and tell the clients to start transacting to him. So we give him this complete the dollar infrastructure on day one from an advisor perspective.
Makes sense. No, I think
Yep,
that's perfect. And as we kind of rightly spoke about this earlier as well, you know, specifically for this segment, it really makes sense to kind of have advisors around to nudge you in the right direction from an investment perspective, given how new a lot of people would be to this instruments as well, and to kind of get the right rhythm and the right right mindset going.
absolutely.
Having having said that, Satinder, I think this has been a really enriching conversation, and I'm sure our audience has learned a lot about how the global investment market has been evolving and what all can be done now. And thank you so much for diving so much into depth, specifically into how especially a retail transaction works. We kind of de- uh, dug deep into it to understand and break down the journeys of KYC, the custodian accounts, and so on. So thank you so much for sharing that. And it has been a pleasure having you here. Thank you so much.
Perfect. Sounds good. I'll send you the form to set up your own account initially, tagged along with an advisor, so we can start off from there.
Definitely. Thank you so
Sure.
much for doing it. We'll definitely
Pleasure.
sign up. All
Pleasure,
right.
Shreya. Thanks.
Thank you
Thanks.
so much.
Bye.